Hi there. Welcome to the closing bell on the 10th of March for me, the Friday morning, and the ASX currently down about 120 points. And hopefully, if you've been watching these videos, you're feeling like you're on top of it, that you're not surprised by what you're seeing at all. And there could be more to come. Tonight in the US, and you'll know more than me, there is the employment figures, which are very important as far as what the Fed will be doing in future. So I don't know what happened, but I'll take you through potential outcomes to give you a sense of how I see things at the moment, because it is starting to get interesting, where volatility could pick up. We've had 10 months of a pretty dry market. The ASX, this is the ASX 200, and this is the world we've been in for the past 18 months. That is a pretty dull market, isn't it? Very hard to make any money in this. It's tough all around. Everyone's getting pretty sick of it. But I have been sending the warning sign that it may not be over yet. We may need another wave to the downside before things settle. And just going over what I've been telling you, the easiest way I guess I could show is this all-time high here, and that was the wave down into June last year. Very substantial sell-off, but it's been an impressive recovery. And you should know that I keep an eye on the midpoint of waves being the point of control. Markets often oscillate around the point of control, which is what confuses everyone and shakes out traders. So if you understand that, you can start to develop trading plans. And that point of control in the ASX 200 around 69, 66, or that's actually where the 200-day moving average is, but let's say 69.50 then for the midpoint. And interesting that the 200-day moving average and that point of control in a very similar spot. And you'll notice the path of prices over this past sort of 6 months or 7 months has been, a move back to that point of control, then back down into the buy zone. And I have the areas. Again, you should be getting aware of these zones within waves where there's a higher probability that prices will change direction and head back to the point of control. And we've got a few examples of that, haven't we? Had a rally into December, which got snuffed out, came back to the point of control there. And this being a daily chart, just in case you didn't know, we had another rally in January that really got people bullish. And look, it got really close to the all-time high there. So by this stage, nearly everyone who was bearish has been taken out of their positions. The bulls are starting to buy stocks, thinking that the market will break out above that high. And lo and behold, that sell zone area starts to trump things again, and that gravitational pull of that point of control starts to take over. And we're starting to see that. That's what I've sort of been pointing out to you the last period. The weekly sell pivot was a while ago, and I was saying it's getting ready. And now with today's price action, just the odds are increasing. And this is, when you talk about the markets, you want to say, well, what do I really know? Not much, usually. Very difficult to be predicting much about the future. And all I'd be saying when I look at something like this is the odds of prices revisiting that point of control would be higher than the odds of prices hitting the top of the range. And that's a similar distance, because that is the 75% retracement, and there's the midpoint. So that distance there is the same as that distance there. And so I'm just saying, higher probability it will hit that midpoint. So if I was trading, I'm looking at, putting trades on with a target to the midpoint and a stop loss at the top of the range or above. And when prices hit that midpoint, that's when I'm taking profits, part profits, to turn the trade from that point on into a free option. Basically, I get to see what happens next, and I either break even on the trade or make money. So by doing that, once it does hit this level, I'm home and hosed with my trade. I know I'm going to break even. I'll walk away with the money I invested. And if the price action continues, if it does break through the 200-day, and who knows what could happen, but if it ends up breaking those lows from last June, we could be in for a really big downside. So if I'm looking at risk reward trades, I'm saying the risk reward here is pretty good. Getting short, and I've actually been telling you for a month about this, because you don't need to risk much to find out if you're wrong. And if you're right, and once you've taken your part profit, the upside, the risk reward on the trade is fabulous. The potential upside is huge compared to the amount you have to risk. So things sort of taking shape here from what I've been saying. I'll just show you a few extra charts. This is the weekly chart of that ASX 200. And you can see here, I was pointing out a while ago, we got the weekly sell pivot there, the rally back up into the guts of that and failure. So now this is the support in that weekly uptrend. So once it breaks through there, that's when things can start picking up steam. And if that weekly trend becomes down, that's when we're in, monthly downtrend, weekly downtrend, daily. That's when momentum can really go. And obviously that low is a very important level. So that's down around 68.50. Below there is problematic for our market. So you'd imagine there'd be support. It'll take a while before this all takes shape, but they're sort of the lines in the sand from here. But yeah, waiting for that weekly downtrend to turn down, and things could start to accelerate to the downside for the ASX. And on the monthly very, very interesting to me because it gives you that sense of a first wave down, a rally up into the sell zone, then potentially a second wave down. And we are in the downtrend. So we've got the 10-month exponential below the 20-month simple. So my strategy really is looking at, when you have those recovery rallies and then turn back down below the moving averages is when you're saying, watch out. And you can see with February's trading, the low of that range down around where those moving averages are as well. So if we have a monthly close below that level, that will be a monthly sell pivot and a return to downtrend within the long-term downtrend. That is pretty bearish. So things just shaping up. If it does keep going, that the momentum could shift quite rapidly to the downside. And obviously the June low is the real line in the sand. Below there is the wow, watch out, big clear out. But then I'm going to start looking for opportunities based on looking at the buy zone of that major wave up from 2020. So that's how I'm seeing things at the moment if the US does sell off after these employment figures. So let's have a look at the S&P. We'll start with the daily because I have been telling you about this 200-day moving average. Super important. So many people look at it that it's important to keep an eye on, but it can be quite volatile around it, which you don't want to be trading the breaks because you can see it often trades through it and, shakes everyone out. But the way this market has been behaving with that long-term downtrend, if I'm just tracing out what I see as the major waves in this downtrend, and I'm looking at the way prices recover into the sell zones usually, then have another wave, recover usually to the sell zone, another wave. And so if I'm looking at that and what we've been seeing and why I've been interested in this price action is looking at this move, and you can see we've had one move up to the sell zone, failed, but then we had that rally that really took out a lot of people, I think, at the start of the year. But it did only rally up into that area I was telling you about, the 1 to 2 standard deviation above the 200-day moving average on the Bollinger Bands, sort of an area where I'd expect to see selling pressure if the market's weak. And things have tipped over from that zone, which is also that sell zone of the previous down wave. So if we're looking at this most recent wave down, we've had a big recovery up into the sell zone. It's starting to turn down. The 200-day moving average was that line in the sand for me, and it's been trying to bounce off it and is through with the news of that bank in Silicon Valley, possibly on the edge, down 60%. I'd say it's got a liquidity problem. If that goes under, what are the contagion risks? Our bank's down heavily today. I did send out my closing bell last week on the banks, saying that they were looking a little bit dangerous to me for more downside. So the employment figures, very important, and you'll know more than me. If the employment figures did actually come out bad, which would be good for the market, it could have a false break of that 200-day and really spike. If the market thinks, wow, that's it, the terminal rate will be close and the Fed will stop raising rates. That doesn't mean the market won't eventually turn down again, just that it will switch off the, very dangerous situation we're in right now, which is going back through the point of control of that wave, back under the 200-day moving average, which is where momentum can really shift quickly. And if we then head back under that low, look, you all of a sudden, you could be quite quickly staring at that October low from last year. And under there is, super dangerous. So let's look at a longer term chart. So this being the monthly chart, and I've shown you this for quite a while here, pointing out why I was very interested in what was going on due to the fact the 20-month moving average, the slope of that had turned down for the third time in 25 odd years, and the last two times were pretty early on in these big sell-offs, 01 to 03 and the 08 crash. So that's not a bad prior warning, is it? And here we are. It's been rolling over. And if we go and have a look up close and think about this, what we've been saying, that 20-month moving average coming in there, just touched it at the start of this year and has been rejected from that. Potential of monthly sell pivot coming up. You can see it's coming in there, but that's early. We need to wait till the end of this month before that will be confirmed. So that monthly sell pivot signal really isn't right until the end of the month. It's just going off because that's how that's programmed. And basically everything saying watch out, and the momentum down. So if we're looking at that bigger picture, we're thinking about this whole wave, and we're saying, right, how has it behaved? We've got the sell-off exactly to the point of control. So this whole rally over the last 5-6 months has been a rally up to where? Up to the bottom of the sell zone of that whole major wave. The selling pressure is there and momentum waning. What happens once it breaks below that point of control? We get targets to the buy zone of that range. So you're looking at a move potentially, if this continues, if the employment figures were strong and the market got absolutely hammered last night, you'll know more than me. We're looking at, things are lining up where it could really start to get out of hand. And, hitting that 2700 level could happen. So things really heating up out there in market land, and could really explode if the figures coming out, the employment figures and CPI are bad, meaning that rates will be higher for longer. Yes, but if they come out and people start thinking they're near the end of rate rising, it could do a U-turn, but it has to do a U-turn pretty soon to stop things really starting to accelerate to the downside. So I really hope you've been enjoying these videos recently. Look, in the next few weeks, you might get a chance to join one of my trading services, and I only get a chance to get new people on board a few times a year. So please keep your eyes peeled for that information. And I shall leave it there, and good luck out there. Cheers.